So here's the 4 P's of marketing, okay? Product, packaging, price, promotion. So your product, that's your investment strategy. That's how you separate yourself. That's how you find deals. That's how you vet those deals. It's your processes, your systems, what sets you apart. Okay, you have your packaging. So is it a fund? Is it a syndication? This split, this pref, that pref, that kind of stuff. You know, the preferred returns we're providing. Price, the fees you charge, your acquisition fees, your asset management fees, that's your price. And then the promotion, okay, that's your compelling message, your promotion. But here's where the issue is. People think that promotion, your message, should be they do it as the packaging. They talk about the packaging, this deal, this pref, this split, this fund, that. That's not the promotion. That's not what you should be promoting. That's not your compelling message. It's the product. You need to talk about the product. You should not be out there promoting your package. Once again, don't be talking about your sack. For those of you who have a sack and you ladies don't talk about whatever anyway, don't talk about that, okay? We want to talk about our product. Here are the 12 questions. These are 12 key questions, man, that you need to be able to answer. And really, your response to these questions, well, that's your compelling messages. That's what you talk about. That's the compelling message, that side. So these answers to these questions. Now, there's 3 components of your 12 questions. Your acquisition strategy, your investment philosophy, your execution strategy. Acquisition strategy, okay? How do you do what you do? How do you acquire what you're acquiring? What are you focusing on? So what kind of deals do you buy? You need to know what you buy, where you buy it, how we buy it. So what we buy, the property, what type of property do you buy? Okay, multifamily, sure, that's your niche. Asset class, is it gonna be B, C, B plus, A, what is it? And then your risk profile, that's core plus, value add, opportunistic. The risk goes in line there. Core, just like A plus properties. Core plus, lower returns but lower risk. You know, value add, a little bit more risk, a little bit more returns, and opportunistic, that's like your major repositions, that kind of stuff. More risk, you can get more upside. Okay, so then your target returns, you know, cash on cash return of 7% through the lifetime, or, you know, 13% IRR or ARR, whatever your targets are. What are those things in a clear, concise manner? Also, why would the seller be selling? That's essentially the story of the deal. Why are they selling? What's going on? Are they in trouble? Are they just at the end of their business strategy? What is it? Who do you target? Who do you buy the deals from? Is it property managers? So for example, Tim. Tim owns an insurance company. If you need some insurance, you should go talk to Tim. He owns an insurance company. And listen, Tim provides insurance for property managers. So a unique thing about what Tim does is he builds relationships with property management companies who he's providing insurance for, who then let him know when an owner is getting ready to sell that they manage the property for. Is that a uniqueness, yes or no? One of our uniquenesses is we have a community of people that we train how to do what we do, who go out there and find these deals and source the deals and bring us these best deals we cherry pick from. You can use that same thing, man. You're part of a community of a whole bunch of people who go out there and source deals, and you work together to source and cherry pick the best deals. That's a uniqueness. Y'all feel me? So you see how that's more attractive than just like, so if you think about your packaging, if it's like this pref, this split, that fund, this fund. Now you offer a 7% preferred return, somebody else offers an 8, you're dead in the water. That's not what you're promoting. That's not what you're talking about. You're talking about your uniqueness, how you do and why you do what you do, okay? So how do you decide if the deal is good? What's your underwriting process? What's your due diligence process? Your location checklist. I have checklists and processes for all of these things. Like boom, 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 boom. You try to simplify it as much as possible so that you can talk about it as simply as possible. I can show you some of those things as well, but you need answers to these questions. Then you have your investment philosophy. This is really your compelling reasons. Why? Like I'll ask you, some of you I asked yesterday at the luau and throughout the day, you would say, okay, I'm investing in, who told me that they're investing in, gosh, what was it? Damn. I can't remember. But they said where they were investing, and I said, but it was pretty broad. I said, well, where? And they said the exact city, and then they told me why in that exact city. They knew. They knew their compelling reasons. See, I was testing them, because most that I talk to don't. They're like, well, let's see, I'm in Florida, I'm in Texas, I'm in da-da-da, I'm in here. This is another problem, man. Same thing that we did. We went scattered, focus. You need to, write this down, please, please. You need to, especially in the beginning, okay? You need to be targeting 1 to 2 markets tops, dude. You cannot have a definite focus. You don't have a clear target when you're in so many markets or no markets. You need to clearly talk about what markets you're in and why you're in them in a compelling way. Meaning, what's your screening processes? And like, okay, man, well, we look for markets that have 2% year-over-year job growth and 5-year population growth with 5-year projected population growth. And we're looking for ones that have that are economically diverse, so that you don't have, no one major industry or industry controls more than 20%. It's really, ours is 25% of the market. 20% is even better, though. That's like really what we aim for. But you need to talk about what those are. You need to define what those things are. Think about all this is just asking yourself questions, and I'm literally giving you the questions to ask. Y'all seeing value here, yes or no? Yes. Okay, but listen, you're only really gonna see the value if it moves from the head to where? So you need to know why. Why would you do these things? Do y'all know why you're raising capital and why you're sourcing deals and why you're doing this business in a clear way? Because you need to know that too. That's the most important thing. Y'all feel me? Okay, and then you need to take it from your heart to your where? Your hands, man, your hands. Okay, then you have your execution strategy. So this is essentially your asset management. So 8 through 10 is your asset management process. Like how you do what you do, okay? Who are your team members? So how do you mitigate the risk? It's a big one, by the way, that you need to be talking about right now, right? Brett talked about it this morning. How do you mitigate risk? It's another thing. It's another mistake that I'll talk about as we go through this, but what are you talking about? The returns or the risk? Couple of both, or just the returns, or just the risk? What is it? We'll talk about it. How do you generate value on these deals? Essentially, how do you drive the value up and raise the value so you can get them the returns? How do you exit the deal? Is it a refi? Are you reselling? Who are your team members that help you execute? And then what proof can you provide? That one right there, by the way, is going to be big for you right now. You need to be talking. Right now in today's market, investors are going to need to see more than just one deal. Like, listen, some of you, how many of you came in to the game in 2020, 2021, 2022, but raise of hands? Okay. Listen, that was one of the easiest times to raise capital because there was more capital in the market than there had ever been. It was a different environment. You send an email, somebody's interested in investing. That's not how today's environment works. Today's environment is different. Some of you don't know any different. Like this is the environment you came into, which by the way is a more normal environment. It's the same environment that I came into when I first started. You actually have to have strategy and systems. See, in good times, there's always these seasons, okay? In good times, create weak people. Bad times, hard times, create strong people. Strong people create good things, good times, right? So here's the thing, man. In good times, sometimes when things are just flowing, how many of you have had this in your life where things are flowing and you get a little bit loose with your systems? Anybody? Yeah. So listen, you're not the first to do that. You won't be the last to do that. It's like literally a season that happens. And you know what? That's where you actually find the gold. When things start to struggle, you recognize it. You don't want that to happen again. You correct it. Okay? That's what it is. So we need to know what we do, how we do it. We need to be talking about multiple deals. So whether it's your deals that you've done, whether it's a sponsor's deal that they've done and you're using them as a case study, whether maybe it's a deal that you're currently underwriting right now that's not working out. Could that be something that you could talk about that would be valuable for investors to hear, yes or yes? Yes. So talk about those kind of things. Okay, those are your 12 compelling reasons. Now, step 3 is awareness. Step 3 is awareness. You need to create awareness. Where will they find you? What will you be talking about? How will you hook them, okay? There's 5 levels of awareness. I'm not going to go through these, but you get it. Okay, number 1, they don't know about you. Number 2, they don't even know, well, number 1, they don't even know they have a problem. Look at me. I said I'm not going to talk about it. I'm talking about it. Number 1, they don't even know they have a problem. So okay, let's do this first. This is actually a good thing to talk about. Level 1, they're unaware. Okay, the prospect is unaware that they have a problem. They're unaware that you have a solution to their problem that they don't even know that they have. So what do we do? What's our plan at this stage? How do we target them at this stage? We don't target them at this stage. We don't target them at this stage. That's a waste of your time. That's like trying to go out there and convince everyone. You're convincing, you don't want to convince anybody. You want to actually be in front of the people that already know that they're looking for it. How many of you already knew you wanted to get into real estate? How many of you knew you wanted to get into multifamily before you saw my ad by raise of hands? It's because you Googled it somehow, talked about it with your friend, and the microphone was on, and my team heard it, and now we targeted you. Something like that. I think that's how it works. I don't really know. Okay? Behind the scenes shit, something like that crazy. But that's what happened. You already knew, and then I just was like, hey, here I am. Yes or no? If you really look at your journey to get here, you'll learn a lot about how your investors will get to you. If you really think about it and ask those questions, and I can paint that picture for you in a very clear light because I know how you landed here. And then solution awareness. So now, or problem awareness, now they know they have a problem. They don't know about you yet though, but they know they have a problem. They know there's a gap from where they want to be. This is where you want to come in. This is where you want to create awareness. Then the solution awareness, now they are aware of your solution that you have. Now the offer awareness, now they're aware of, the solution awareness is aware that there are options out there, there are solutions out there. The offer awareness is when they know that your solution will help them. And then the full awareness is when they know for sure that you're the one they're going to invest in. We need to get people there as quickly as possible, but more importantly, we need to get them there. Yes or yes? Okay, that's your 5 levels of awareness.